And we're live. Hi guys, I hope you're all doing well. I wanted to hop on here quickly and do a quick live stream to go over two huge market catalysts that we need to look out for today, but also especially tomorrow as we move into Friday. So the first thing is that Germany announced a huge lockdown, mostly for their unvaccinated citizens, and this could have a huge ripple effect, not only on the market, but throughout Europe, which would then have an overextending reaction throughout the rest of the market. So we're going to look at that very quickly. As you can see here, the cases in Germany have been rising really steadily. If we go all the way back to March of 2020, we didn't even have that big of a spike. Let me actually throw up my screen here for you so you can see that. So as you can see here, this was March 2020. It wasn't huge, and then obviously, you know, November last winter we had a very large spike, but now it's been even larger. The new cases are at 65,000 a day, so really huge. And they announced a lockdown starting, I don't know if it started immediately. It was announced today, so it might be immediately. They're considering mandatory vaccinations for all of its citizens in the coming months. That hasn't passed yet. That would move forward in February, which is the same thing that has happened in Austria, or is trying to happen in Austria. We'll get to Austria in just a moment. But as you can see here, under the tightened restrictions, unvaccinated people can only meet 2 people from another household. Bars, nightclubs must shut down in areas with an incident rate above 350 cases per 100,000 people over 1 week. So restaurants and bars might need to shut down if there are a high COVID rate in those areas. So that is big because that will not allow people who are vaccinated to also go to those places. If we just scroll up here, it's essentially what we already have in Canada. So they're going to be banned from all but most essential businesses. So supermarkets and pharmacies they'll still be able to go to, but they won't be able to go to obviously bars and nightclubs and a lot of other places too. So really just essential services will remain open. So the main thing that we need to watch is not only the impact that this is going to have on the market with the new variant. Things are moving pretty fast, but are other European countries going to adapt or adopt this as well, because that will really be negative for the euro. If we hop over to euro yen, there hasn't been a crazy reaction just yet. Of course, Europe isn't open yet. This is, you know, the Asian session. But we'll want to watch very closely to see, let me move myself over here, to see what happens with that. If we take a quick look at Austria, Austria is interesting because we're actually at an inflection point. So Austria did lock down. This happened, I believe it was last week when we had the news that they were going to lock down, really move market. So we're at an inflection point here. The high was around November 23rd, and cases have started to drop, which is a good sign, but it's possible that it's a little too soon to know if this is a temporary pullback or if things will get worse throughout the winter. If this was just a normal lockdown, that would be one thing, but I think the market is really concerned because of the new variant fear. So the Omicron variant could really shake things up, especially because people that are vaccinated are catching it. The first 4 cases from, I believe, Nigeria were all from people that had the vaccine. So it's not looking great, again, with the Moderna CEO saying that it doesn't look like their vaccine is going to offer a lot of protection. So you need to be careful for that. So I wanted to give you guys that update. We need to really watch euro yen as a barometer for risk sentiment for what's going to happen. So keep your eyes on that. And that is really the COVID news. The second thing that I want to go over is Nfp Tomorrow. I think Nfp is always a big market mover, but tomorrow it's going to be even more important than usual. The reason for that is, again, we're at an inflection point with not only inflation and the rhetoric from central banks in regards to the kind of stimulus that they're pumping into the economy, but also with COVID, with the new variant, all of these concerns as we move into the end of the year. So there's so many different variables right now that it's making it very difficult for central banks to have a clear message in terms of whether they're going to hike rates or not. So we need to really keep a close eye on Nfp Tomorrow, because it's going to be an indication for whether rate hikes are coming or not. If we didn't have the new variant, they would be coming. Less stimulus is here. It's here to stay for now, especially with inflation. But the new variant is really throwing a twist into things. So if we just look for the data that's expected for tomorrow, so the unemployment rate is, this is the forecast. So the previous was 6.7%. They're expecting it to drop slightly to 6.6%. This is the CAD, so bear with me. So the unemployment rate in the States was previous 4.6, so they're expecting, again, a small drop to 4.5%. The non-farm employment change, I think this is really what we need to see. So the forecast is 553,000 jobs. So if we see a huge beat, if we see 700,000, 800,000, 900,000 jobs posted tomorrow, I think that the market is going to really buy the dip that we've seen in stocks, because that's going to be a huge indication for central banks that the economy is starting to heat up. Inflation is really starting to soar, and they're going to need to do something, and that something is going to be increasing interest rates. So that is what you need to watch. Again, if it was a huge beat under any circumstances, it would be a market mover, but because there's so many uncertainties right now, you really need to keep a close eye on this. Stocks today, if we look at the chart, stocks today had a really good day. We got a nice bounce from this 200 EMA. We're pulling back to the 38. This area here, right around 35,000, is going to be really, really important to watch for stocks. This is the Dow Jones, so really keep a close eye on that. If we get a huge miss tomorrow and we don't actually get the 500,000 plus jobs, then I think the market is going to tank. It is going to drop further, and you might want to just hold off a bit before buying the dip. So it's going to be the leading indicator for interest rate hikes and what the central bank is going to do. So if you're investing in stocks, buying stocks, and even just trading FX, keep an eye on this. It's much more important than it usually is. So that is it for this quick little update. Tomorrow is going to be an interesting day. You guys can follow me on my Instagram for any potential updates that I can share with you guys there. Stay safe out there. Keep your eyes on any European news, because this could carry over to other countries. And all of that being said, stay safe out there. It's going to